The new tariffs imposed by President-elect Donald Trump are seen as a serious threat to Tesla's future in Europe, especially following the implementation of additional trade measures. Tesla's stock value has fallen significantly due to economic uncertainty. As a result, the US stock market started the week at its lowest level in years. Stay ahead of the curve with the latest in tech. Subscribe to Datadollar now and never miss an update on the innovations that are shaping the future of business and technology. Join our community. Although the tech sector in general has suffered due to the recession, Tesla stands out as one of the most affected companies, facing growing risks amid the economic turbulence. Tesla's sales have steadily declined in recent months, not only in the United States but also in Europe and Asia. Many experts attribute this drop to the escalating trade war initiated by Trump, a conflict that Musk has firmly supported. However, with Tesla's plummeting value and the impact on other Musk-associated companies, speculation has arisen about whether he will reconsider his political involvement. The big question remains whether Trump's tariffs have directly impacted Tesla's struggles and, consequently, Musk's problems. A deeper analysis of recent events could provide more clarity. US financial markets took a hard hit during the week, as investors' concerns over Trump's economic policies triggered a wave of massive sell-offs. Wall Street's volatility index, known as the fear gauge, hit its highest level of the year, while stocks and Bitcoin dropped due to mounting uncertainty. From the start of the session, the major stock indexes opened with notable declines, although there was a brief rebound at midday. Nonetheless, the market remained under pressure. The Dow Jones closed with a loss of 890 points, equivalent to 2.8%, after having dropped more than 1,000 points at its worst moment. The Standard & Poor's 500 fell by 2.7%, while the tech sector suffered the biggest blow, with a 4% decline. Both the Dow and the S&P 500 recorded their worst day of the year. The Nasdaq Composite experienced its largest single-day drop since September 2022. The recent market downturn has wiped out all gains made since the presidential election in November, closing a difficult month for Wall Street. Investor anxiety over Trump's tariffs has triggered a massive sell-off, pushing major indexes into negative territory and raising concerns about the economy. Trump acknowledged the possibility of an economic transition, but avoided outright dismissing the chance of a recession when asked directly. In response, he said, "I don't like making predictions about these things. There's a transition period, because what we're doing is very big." Tech stocks were hit the hardest, dragging down the S&P 500 and driving the Nasdaq into correction territory. The S&P 500 closed down 8.6% from its all-time high on February 19th, with major tech companies like Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla leading the losses. Investor anxiety deepened following comments from President Donald Trump, suggesting a recession remains a possibility. According to Anthony Saglenbean, chief market strategist at Price, these remarks further shook an already unstable market, triggering another wave of volatility. Despite these concerns, the White House maintained an optimistic tone, assuring that Trump's second term would bring historic economic growth. Kush Desai, a White House spokesman, emphasized that business leaders have backed the president's America First policies, including tariffs, deregulation, and energy production expansion, committing to multi-million-dollar investments expected to generate thousands of new jobs. Trump defended his economic record, stating that his first term saw historic increases in employment, wages, and investments, and expressed confidence that his second term would bring similar success. Tesla's collapse has been significant. On Monday, its shares closed down 15.4%, extending a negative streak that has shaved off nearly 40% of its value since November, following an initial surge after the US presidential election, when Tesla shares peaked just before Christmas, gaining 91%. However, the company has suffered losses due to declining sales in Europe and growing protests against Musk's role in the Trump administration. This discontent stems not only from liberal critics and public officials, but also from investors who once viewed Tesla as one of the biggest beneficiaries of Trump's second-term policies. Musk, who was one of Trump's major financial supporters during the campaign, is now a key figure in his administration as head of the newly created Department of Government Productivity. From this role, Musk has pushed for drastic budget cuts, slashing previously approved congressional spending, and proposing mass layoffs of federal employees. However, his rising political influence has impacted Tesla in the markets, with its stock dropping 5.6% in late trading and accumulating a 45% loss from its December peak. Musk's presence in Washington has contributed to Tesla losing 38% of its market value. Tesla's collapse reflects growing investor concerns over Musk's political role. Initially, it was expected that he would act only as an advisor, without directly involving himself in controversial decisions. However, his influence within the administration and the diversification of his businesses, which include Tesla, SpaceX, Neuralink, and X, have raised doubts about his focus on the automaker's growth. Besides political factors, Tesla is facing fierce competition in China and Europe, where other electric vehicle manufacturers are quickly gaining ground. Meanwhile, Tesla's global sales dropped 29% in the first 2 months of the year, with a 16% decrease in the United States between December and January, according to Cox Automotive estimates. In Europe, electric vehicle sales rose by 3% in January, but Tesla failed to capitalize on this trend. In China, its second largest market, sales fell by 50%. Despite these figures, some analysts warn that Tesla's sales drop could be due to seasonal factors, as the company traditionally boosts sales in December to meet annual targets, causing a slowdown in January. Analyst Gordon Johnson noted that this pattern was observed in previous years as well. While Tesla still records strong global sales, its difficulties in China reflect increasing competition. While in Western markets, it faces a different issue: the public perception of its CEO, Elon Musk. Competition is impacting Tesla's sales in Western countries, and the company has few options to counter it. One analyst noted, "We know full self-driving won't be a reality in the short term. I think this could be the year Tesla's stock collapses." Even some of Tesla's most optimistic investors have started questioning Musk's growth projections for the company. Jen and Mr., managing partner at Deepwater Asset Management, highlighted that expectations have shifted significantly in recent months. "I think investors are adjusting to a new reality regarding Tesla's deliveries this year," said Mr. 3 or 4 months ago, Musk projected a 20–30% increase for 2025, but last month, he avoided mentioning that goal altogether, leading analysts and investors to assume it is no longer realistic. However, the most important question is how much of Tesla's stock decline is tied to Musk's political profile. During the election campaign, it was unclear how active his participation in Trump's administration would be, and some believed his role in the Department of Government Productivity was exaggerated. Now, investors see Musk exerting more influence than Trump himself, a connection that appears to be hurting the Tesla brand. Public backlash against Tesla has intensified, with protests outside the company's stores across the country. Last weekend, in Loveland, Colorado, a protester was arrested and now faces federal charges for violent acts and possession of incendiary devices related to a previous attack on a Tesla store. A key indicator of changing consumer sentiment comes from SIP Global Mobility, which tracks sales trends. Data shows that Tesla loyalty has declined in blue states, where the percentage of repeat buyers dropped from 72% at the end of 2023 to 65% by the end of 2024. Meanwhile, in red states, repeat Tesla purchases only rose slightly from 47.6% to 48.2% over the same period. This drop in brand loyalty in blue states has led to a loss of Tesla's market share in key regions such as California. Furthermore, a recent Morning Consult survey highlights Americans' growing reluctance to buy a Tesla. The poll revealed that 32% of potential buyers would not consider purchasing a Tesla, up from 27% a year ago, and a significant jump from 17% at the beginning of 2021. On the other hand, only 16% of respondents said they were almost certain or very willing to buy a Tesla, a level of interest that has remained stable over the past 4 years. The backlash against Musk and Tesla has spread to social media, where viral videos show crowds booing Tesla's Cybertruck, which needed a police escort during the Mardi Gras parade in New Orleans. Posts encouraging vandalism against Tesla vehicles and reports of incidents at the company's stores have also circulated. If you enjoyed the video and would like to continue learning about technology and markets, subscribe to Data Dollar and leave a like. See you next time.